And officially, good morning. Sorry, I have a little something in my throat. Happy Monday. Welcome to the Options Income Launchpad Monday Market Kickoff. My name is Scott. I will be your host. As always, what we do is for education and illustrative purposes only. Nothing is intended as a recommendation to buy or sell any security or financial product. We're not brokers or advisors, and therefore we don't give anything that should be considered personalized investment advice. Any decision made based on information from our platform should be done so at your own risk, yada, yada, and yada. Okay, so what was the conversation? And good morning to you, El Jago. Hi, Vladimir. Good morning, FP. What was the conversation as we ended yesterday? Our market posture declined, but not by a lot. 1/4 of a point for me, 1/2 a point for the Oracle. I'm at a 1 point something or other. I'm at a 1.5. Stable, though, for the last 3 weeks. The Oracle's at a 2.75. It chops around a little bit more, as you can see. Its analysis, a little more volatile. I would say the vast majority of other scores exist in between these two. I didn't see anybody say lower than me. I didn't see anybody say higher than the Oracle. So there it is. We represent the extremes, apparently. So stable, where? A little above neutral. Right? A little above neutral. It's not a strong bull market. We have to recognize that. So good morning, Stephen. Good to see you. All right, so let's go now. What was the conversation? What is the impact of the weekend major combat operations as they've been defined? So we moved from the futures, but we know what the news is. The news is the conflict. Oil spiking, the market reacting negatively. And so it begins. We'll see. It's hard to predict what's happening. Gold up, silver down, right? We have interesting things start happening. So mindset for open trades. We're in protectionism mode here, to be fair. I would expect you don't have many trades on. Less trades now than a month ago, I would expect, or 2 months ago. So we have an early week opportunity list, but in the market like this, when you come into Monday morning selling, all you're thinking is let's manage what we have and then see if there's anything else that might be setting up. But okay. And this week's trading plan, we're on section 5. Goes fast, right? We're already on section 5 of 8. So if you were like, wait, we started? Yeah, we started. We're halfway through and then some. Routines. The goal. This year's trading plan goal for everyone is a 60. 60. You might be thinking, what does that mean? 10 points per section, 8 sections, 80 points total, 60. It's a 75. We're not asking for a big, we're asking for a C. Give us a C. All right, let's go. There's silver miners. They're flat. That just happened to be on it. Absolutely, there could have opportunities. This thing could dissipate quickly. Right? We could be like, oh, it's just we thought it was going to be bad, but all of a sudden it's just not so bad. And 100%, Doug, I'm with you. look, the fact that my posture is still where it is what I'm relying on, not the fact that we're selling a bit today as a reaction. Alcoa was on our list. Is on our list. Alcoa looks like it's holding up after its breakout. Apple, of course, no, but Apple's still holding. A little bit more of a triangular type shape now. And you're going to start to see some of this. These symmetrical triangles. What are they? They're consolidations. We don't really do much with them, but wait for them to break one way or the other. But again, a consolidation is indecision, not bearishness or defensiveness. Applied Materials. I skipped Archer Daniels. Archer Daniels turned and today is pausing, so nothing really there for us. Applied Materials is setting up nicely. So to Doug's point, there's the first one. Look at the strength of that. Again, when I'm going through my watch list, I like to say, if you didn't know anything else going on and you just read the chart, what would that chart tell you? This chart says, hey, it's bullish. It's bullish. Look how bullish that is. Find a bull market. And if you know chapter 2 from my book, it's not published, but I speak of it here. I'm procrastinating. You know how people can be. Chapter 1, find a bull market. Chapter 2, buy the dip. The end. I know there's a little bit of polishing left in there, but it looks like it's dipping. That's the opportunity. So again, yes, that's the first one. I'm like, okay, that's a nice looking setup developing here in the course of what's happening. AMKR is one we're in, and we're saying, hey, this thing's trying. It's got to move on this line for me. It doesn't have much leeway out here. It's not a bad loss even now. And so if it can start moving, great. If not, right, it's in the same place it was in a day that I already held on to it. Anyways, still going to give it a little more room personally. But I will exit quickly once it has failed in here, right? It doesn't get a lot of leeway now. Some people may be out of that already. Amazon still just sort of stuck down there for me. APH, even though it is consolidating down, I'm not really seeing much there. ASX, put it on the list. Strong stock, great trend, higher high, pulling back. Great opportunity for a setup through here. And watch this thing head on up to 27. Right? Why would we not think that based on the way it's moving? So ASX, that's 2 already. So we don't doom and gloom. We have a strong watch list. This actually should be opportunity. AXP, no. Financials, still in a bad place. BABA, no. Consumer discretionary, also not in a very good place. BAC, financials down. BCS, financials down. BUD, consumer discretionary down, but consumer staples still showing some strength. Here is a staple. It's had a great run, and now it's a little sideways. I don't know. I'm on the fence with this one. I'll keep an eye on it. City is down. Caterpillar down. Now Caterpillar has been an interesting place for us. We actually looked at that as a trade right there. What saved us? Liquidity. We're like, the liquidity is not good. So what happened? I don't know. But the spreads were too wide. We said no. Now, this is also a strong representation of industrials, and industrials is the lone growth sector. The lone growth sector showing us signs of strength. CF gapped up due to, I would assume, news. Isn't CF steel? What would be the impact here? I thought it was steel. Someone tell me if I'm wrong. Analyze fundamentals, materials, production of ammonia. Oh, okay. It's not steel at all. I'm completely wrong. Oh, yeah, okay. This is more like fertilizer stuff. Ammonia, granular, urea, nitrogen products, urea, ammonium nitrate, diesel exhaust fluid, urea, liquid. Okay. Fertilizer. Why did I think steel? Okay, so they're more of a basic materials. What's the gap? Inquiring minds want to know. Coherent. Spring farming made that, huh? Interesting. Cisco. Yeah, tech is struggling. The airline's struggling all of a sudden. We all, I believe, are out of that. That one didn't work so well. Okay, Dow. So there you go. There's a little bright light, one of ours that we have held on to. We have a new line. We know that line, again, it never really broke support. Tested, held, didn't break. Okay. I'm skeptical. I'm in it, but skeptical. At this point, if it starts moving up here, certainly I'm not looking for... Well, I don't know. I guess we'll see how it moves. We'll see. Maybe there's a broad recovery. This becomes... Maybe we end up calling this the 5-day war or something so that they know they're going to go in, call it quickly. Declare victory. That's fine. I think that's a better course. I mean, what are we aiming for? They're like, we're going to prevent them from getting a nuclear weapon. I thought you obliterated it already. So that's check. You know, hit the Navy. Great, man. Throw some bombs, blow up some ships, call it a day. Victory. Pull them back. Celebrate. And market's like, okay, we can live with that. Boom, we're off and running. And then we call it the 5-day war. I'm good with that. Let me know your thoughts. Let's wrap this up. Ford, no. GE, that looks great. GE looks great. That's 3. So in this market now, let's talk about a couple of other things. Let's pause for a second at GE. Let's just go look at the SPY. We're 20 minutes in, opening range. We've already gotten a chunk of it back. Boom. 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 Thinking of future trend. Yeah, I mean, but like, what does that look like? Are we saying a regime change now then? Right? I mean, we're obviously not going to look, the Middle East exists. There's going to be conflict coming from there constantly. There's a lot of extremists in the region, of various factions. I don't know. Interestingly, a look at Iran like in the 1950s, they were like, there was more freedom, elections, women could vote. It seems like the more we've interfered, the worse it's gotten over there. Okay. All right. What's the play here? I would not bet against this market. So at this point, if you're a day trader, this thing has shown you that the buyers are trying to come in. Now there's a pause. So the fact that we hit this here, pull back, maybe there's an opportunity to wait for a little consolidation. Where are my day traders at? Are you guys risk on? Are you waiting? Little consolidation here. I'll tell you my concern with this war is the fact that Israel's been calling for this war for a long time. I mean, you can go back 20 years and have Netanyahu like, they're a week away from having weapon. So it feels like we've been kind of pulled into someone else's war. Certainly, Iran is of no concern to us by way of an attack, but I don't know. Okay. Let's. I would get they have. I mean, listen, I understand, but it's going to repeat itself. Amen. That's what I'm saying. There it is, right? Like, what's our intent? We have to have an objective. That's it for me. What's the objective? Are we thinking like what? The country of Iran will exist. It will still have people. Those people are going to still, right? Like, I don't know. Okay. Back to trading. Let's get to GM. We talked about GM actually closing on Thursday and Friday. So hopefully everyone was able to shut down. You can see this one is continuing to get hit, which, as we said, this is a great representation of some of what we're willing to see or not see. So let's pause here for a second. This was the trade. We had seen bullishness coming in. And you can see we got what we were looking for. There's the turn. And in fact, that was sort of like, hey, this thing looks like it's going to go. And then immediately consolidated back down. And then it held. And then the next day, now the next day could have been exit day. And I think some people maybe did exit there. So this is, for those of you who traded or watched this, a little post-mortem. That would have been a day where you're like, you know what? This thing failed. I'm going to get out. Hopefully you failed in the body more than in the shadow, if that was the place. Now, if you didn't, all of a sudden, you might have said to yourself, hey, it didn't break support. It held support. The next day it started to turn. The next day it started to turn. The third day, it completely engulfed and passed the previous candle. So at this point, remember, this was our first trajectory. Number one. First trajectory that we had looked for. And when it hiccuped, which is what we call it, we're not, it's a little hiccup. It didn't fail. It sputtered, right? Something along those lines. A little sputter. We've had, I mean, how many, think of them personally, but we've probably had 5 or 6 of our best trades where things really, really smashed through to our targets and then some occur after a hiccup. So we have to have a plan for that. We have to have it's not a, look, this follows this line that I drew, or, that's it, I'm out of here. Ugh. If we have that rigid and narrow of a perspective of what we think might happen, it's going to be very difficult to trade. So we come in with hey, here's a good representation of what it looks like to be right. This is what we're hoping for. We buy an extra 14 days just to make sure. And usually a hiccup, if anything, is maybe 4 days. 3, 4, maybe 5, right? So there's a little hiccup, and then it's, now what? Then we're looking for this thing to come again. We'll see a couple of these as we go further, but you can see that on number 2. So this is the trajectory. We move it over. We say, I'm still looking for this. We move it over. It starts to move on that path. Once it fails, it's not like, well, maybe it's going to hiccup and then we'll catch this third try out here. And no, we don't have time for that. We didn't buy time for that. We absolutely have time for one hiccup. That's scoped into the trade. And so as we're managing trades, if we start to see this secondary failure, and if you happen to hold through the first one, the second one, clearly it broke support. There's no reason at that point for this trade other than hope. That's, if you're still in it, it's hope at that point. You hope it comes back. Okay, talk to me. Does that make sense? This little anatomy of a hiccup. What does failure look like if you're on path number 1? Hey, we just started. We're okay. Give it a little room. When we shift over to path number 2, it's like, okay, the leash is shorter. Anyways. Okay. Hopefully that makes sense. Google. So Google, if you traded it, this is a hiccup. If someone said, hey, look, this thing is bouncing off the 100. I'm trying to catch it here. And I know we had a few people take that. For me, what this did was broke the consolidation. Now the buyers have done enough. So this is either the first signal coming up there or the second signal if you already took it. If you took the first, anyone want to make claim to that? You're in a hiccup. You were hoping this thing was going to kind of make a little V, get back up here at least. But it hiccuped and now it's coming back down. But you can see that even as it comes back down, at this point, we're looking for this higher low. We're watching here. Does this thing turn? Because I'll still look for that same kind of a move. I'll be like, all right, now we're looking for this. So I'm looking for the hiccup as my first indication. If you've already taken this trade, there certainly was a reason. The buyers absolutely smashed through down there. It bounced off the 100. There was plenty of evidence to support a trade there. So at this point, I think, yeah, that's That's what we're looking at. Okay. Let me get out of this. Goldman, it's recovered a little bit, but still in the downside. Home Depot, consumer discretionary, down. This is a miners, silver miners, down. IBM getting beat up pretty good. IBM, now that could looks like you could be riding that to the downside a little bit there. Intel. I actually like Intel still. Same kind of a thing here where I'm thinking to myself, hey, this if this holds, that could be turning into the next bullish opportunity for us. So in the midst of the selling, and look here, I'll say this at the end of the day. I hope we achieve our objectives with this conflict. It's not war yet, right? Because Congress has to help. So I hope our objectives are clearly defined. I hope we achieve them quickly. I hope we lose as few American lives as possible. That's what I hope. I think that's what the market hopes. I just know historically we've been pulled into some things through where you're like, wait a second, that's not. We started because of this, and now it's this, and we end up in these drawn out conflicts. That's what I don't want to see. There it is. Lumentum, bullish, but not really tradable right now. LRCX, very tradable. Come on down. You're the next contestant on The Trade is Right. That looks great to me. Trend looks good. Not a huge higher high, but this thing popped out another, let's see here, 205, 50-point move. 50-point move. Doug, I'm going to agree with that on both sides. I'm also going to say there's a lot of is it APAC? Is that on both sides? A lot of, hey. Anyways. LRCX, put it on the list. MasterCard. No. Again, it's like American interests. That's it. I don't find myself aligned with Marjorie Taylor Greene much, but her and I see eye to eye. What are we doing in these, Monster. You can see there's one of those hiccups, actually. We looked at it here first, and then it ended up giving you exactly that after the hiccup. Exactly what you were looking for after the hiccup. Little hiccup, it stuttered. Questionable liquidity. It was not an alert, but it did make money. And now it's setting up again. And so I'm definitely going to watch for another opportunity on this thing. Again, so we should be watching for the next pivot on this one. Absolutely. Right? Absolutely at this point. This is the second this thing started to pull back here. Our thought is this going to, what's it going to, where's the next opportunity for a setup to develop? And you can see sometimes it doesn't hiccup. No hiccup. Hiccup. So we can't just think, I'm going to trade for the first one and be ready for the hiccup. In case it goes through that. That's how I want to look at these swing trades. Morgan Stanley, Microsoft. Well, Microsoft is trying to figure some things out, possibly. Micron's holding up. You can see that it's turned into what would be considered the seller's cycle, and it really hasn't given much ground. I'm still holding this one. I think maybe one or two people are still with me on this. If I can get this to bounce this week and just kind of get back up into this region here and get to another weekend, this thing's really going to start to crank out a little extra time decay at the end. So anyway, well, it's holding up in the face of, as a tech stock, it's holding up remarkably well. It's got some strength to it. Anybody still in this one? Talk to me if anyone is. I think there's a couple people who are still hanging on and still doing its job. So, anyways, yeah, we're doing okay. A couple of ours, nothing's really bad. We stopped out of the ones that went bad. There's Netflix. You can see it's really starting to slow down now at this point. This little, the investors are actually quite glad they're out of the running, it appears. I would imagine this thing pulls back soon, and when it does, we'll see what the opportunity looks like. Some people might think it's going to have a big pullback, and they might want to try to drop the downside. I'd be careful trading the downside of that. New holdings. This one we traded once, and you can see it tried to move, did a little bit, it hiccuped, tried to move, fell apart. Most people ended up closing in here, or else I know a few people took a little bit of gains. That was an interesting one. I don't see this thing doing anything anytime soon. I'm going to drop it. This is also an opportunity for us to clean up our watch list. Moving on to Nvidia. In Netflix, okay. Nvidia, no. Palantir. Palantir has actually kind of gone through a little sneaky reversal over here. Or this is the first time up, but whatever it is, I'd be waiting for the next pullback. I wouldn't want to trade in late into this. I don't think it has enough indication that the buyers are there. Qs, we're back to look how much we've gotten back. Sellers opened the market. The buyers are in control, at least for the first 40 minutes. We're only down 0.3 now. So again, there's Rocket Labs. Rocket Labs seems to be holding this support level after earnings, maybe looking for a bounce. In a put on the Qs. Yeah, so it's going the wrong way at this point, huh? This morning's momentum. Good start. Not holding up as much. Here's Ross Stores, so very similar. I would expect it to be ahead from last week, yes, right? RTX. We actually had flagged that one back here. Was set. If you were going to trade it, would have been Friday. And obviously it's reacting to the conflict. But again, whatever happens next that might be good for the market would be less good for this, right? Because if this is like hey, we've achieved our objective in 5 days, now we're calling it. These short bumps in some of these defense stocks won't last as, they'll be just as short lived, where it's like, oh, I guess it's, I guess it's not. Silver down 3.5. SNDK. Here's SPY down 0.25%. We've gotten almost all of it back now. Here is STX. What's the news? I know there was like an Iranian response. Are they still responding? I don't know. Okay. SYY. So SYY. Ooh, hold on a second. Wait a second. In a SPY call. Nice. Bullish is the direction. Like as we said, right? If you're going to do it, that's the way you're looking to go. SYY. I'm looking at this as a continuation trade right here. And nope, that's not it. And come on over. Come on, buddy. Come on. There you go. SYY, somewhere between 90.08 and 90.60. We're at 90.55. So you can see the stochastics has turned. We got this. And now we're saying, hey, look, we can actually catch it here. If this was valid, this is like an opportunity for this one. Looking for a move up here to 96.90. So that's about 6 points and change. And let's go look at... I could put a stop loss probably underneath these here. This transition, 88.50. 2 points. 2 points to the downside. 6 points and change to the upside. There's my 3-to-1 on a food stock, which is consumer staples. And as we saw in our sector rotation, consumer staples is definitely where we're seeing some of that momentum. So we looked at Alcoa. That's basic materials. We looked at Archer Daniels. That's foods. We looked at, right? So when you look at where the momentum is, now there are some. Applied Materials is technology. But GE, that's industrials. We're looking at SYY. That's consumer staples. You can see the rotation even in where our watch list is looking to find opportunities. So yeah, I would actually say this one is on my list. We'll see what we end up with that one right there. Actually, I'm going to probably finish building that trade. Let's go through the rest of this list, and that's where we'll spend some time. TJX is down. Tesla down. Taiwan Semiconductor. TSM failed on this last one, but it failed to make a big move, but it did make a higher high. So if this comes down and finds a new support level above the 50, I'm going to say there's another trade there. That's another place. Here is Vail. Mining, that one's down. Here is Viking Cruises, big down. Let me type in VIX for us to see that today. You can see part of our concern of escalation actually has already come to pass, although it's come back down. This escalation pattern, at least we're back down here very quickly. That's definitely a higher high. That is a higher high than anything we've seen over here. And that's something that we are aware of and sensitive to. VOD. Setting up. I think VOD could be a trade development there. Western Digital, same thing. Still looks pretty good. Walmart looks fine. It's not quite up to snuff, but this isn't even on a hiccup yet. This is just like This doesn't really count as a hiccup through here. This thing just sort of moved in there. So Walmart looks fine. So when you look at the trades we have, they're all in an okay place, especially considering what the market did. We do have alerts setting up, including one we're going to go play with a little bit live here. So let me know if you have any questions about any of those. Let's go back to SYY. And I'm going to get... Okay. Let's see here. We're looking at... I should probably get some different trades considered here. The 90. Oh, that's such a wide spread. Now I'm second guessing as I look at this. I thought we looked at these and we were like, they're okay. This is an example. This is an example of the market volatility leaking into the options. With the spike in the VIX, the market makers also went a little wider with this is definitely wider. Because we were looking at the 95s. RCAT. What? Okay, so Doug, you've got my curiosity piqued. Red Cat Holdings. Okay. I mean, for me personally, this is the first time the buyers have done anything of note. It was consolidating like this, then this. So it really, this is kind of the first breakout. So I would be looking at this thinking, all right, this thing could even go a little further. But it's going to burn out. And then I'm going to put a line right through the middle of this. And I'm going to think to myself, all right, I bet we see a little bit of a consolidation back down. And then here is where I think I can get it and ride it to at least 18. And if I can get 18, I can look to take $1.50 of risk to get $3.50 of gain to the upside. And now I'm getting 3 to 1, 3.5 to 1. So yeah, it looks good. It's something gave it a spark today for sure. And it's like, now what? In it currently. Oh, good. Very nice. Red Cat. Where were we? Oh, we're going back and we're taking a look at SYY. Woo! All of a sudden things turned a little south though. You can see we had a little bit of move and then it's back to the downside. Is that across the board? Let's go take a look. And there you go. Minor consolidation, another push up. So buyers are definitely in intraday control right now. Okay. In it currently. All right, let's see. Let's go back in. I'm still going to play with it. It's going to stabilize in here. Let's go back. Target, I think I have that in place. 96.90. 96.90. That's what I have. Yes. These are just so expensive. I'm going to actually go over here to these for a second. There's 3,000 contracts. You can see that's the best. The problem is that, you know, if you look up here, you're $2. You lose ground as your options move in the money. So if you were to move in the money because the stock moved $5 in the right direction, $10 in the right direction, right? Right now, this is at the money, but then it would become $10 in the money. And if you look over here, you're going to lose 2. So you can't think, hey, I'm only losing 50 now, and that's going to stay that way. That's going to move. So that's why on something like this one technically has like the ability to meet our criteria. We have thousands of contracts in open interest right here. But when you look at, you know, what's going on, the 95s you would pay 85 cents for, then they'd be worth 10. The 9750s cost 20 and they're worth 5. So like when you look at this here, you've got a lot to overcome. And even, I'm kind of talking myself out of it. It's too much slippage. Too much slippage to the market makers. They're the ones making the money on this. They're just kind of enticing you in. It's right on the bubble. 88.65. What day? Okay, so I'd probably go out. You can see it's barely holding on to a 3-to-1 there. This one is better, but you can't assume you're going to get this because you're going to lose a good chunk of your profits to slippage. If this thing moves, let's see. If we paid 50 cents for 10 contracts, $2.50. I don't know. Maybe, yeah. Now I'm. If our 95s move up, we're looking for a $6 move. So basically, that would kind of put where they behave like this. These are the at the monies. And you can see we probably would be able to get. So if I could get these options for 40 cents, then I would have a little bit more, right? Then they would move to where, I mean, they're at least $2 in the money plus some time decay. If I could get them for $2.50, that's $200 profit times 10, $2,000. There's $2,000. Yeah, this is right on the bubble. This is right on the bubble. And the only way I would do this is the 95s. The 95s, only if I can get them for a certain price. And it's basically all or nothing. So if you look at this, this says you're risking 363 out of 400. So you're like, that's all of it. We're not thinking, hey, I might keep $37 of my initial $400 investment. If you're 90% in there, you're pot committed, right? That you're in for a penny, in for a pound. So that's what this trade. I'm not sure if I'll do this as an alert, but this is definitely one in my wheelhouse that I would do. I don't know. Give me your thoughts, everyone out there. Give me your thoughts on something like this. It's a little more speculative, but the risk control is in the fact that a trade like this, you cannot lose more than you put into the trade. 40 cents, if you get it. If you get it, you've split it down a little bit, and you're saying, hey, if I can get that, this trade can make sense. We've got a couple of minutes, so I want to hear from the group thoughts on a trade like that in a market like this. Guys have gone quiet on me today. It was all the political discussion. That's what getting into a global conflict does. Gets us thinking about things. A little hesitant, Kent says. Okay. I mean, those are all fair, right? Not worth the risk, John says. Spreads pretty wide. There's definitely some wide spreads in there, right? Like there's only a very, very narrow window where this works for me. And that's the 95s, which are out of the money now, becoming the at the monies if it gets to a certain point. But these are all valid concerns. Sarah's like, no, I pass. Need to see a pullback first. Got it? Yeah, maybe we'll lock it in. But how's this? Do you feel better equipped to be making these types of determinations on your own? Where you're like, yeah, no, this isn't for me because, I feel like that's at least helpful. Knowing when to pass and why is very good information to have. Yeah, I think Don put it well. The market posture is saying, hey, you know what? Stand down. When in doubt, sit it out. Your market posture score says that this is the kind of market that's struggling to find follow through. Things are less likely, so less risk, less trades. I don't know. Maybe we'll do I'm feeling something. Maybe a butterfly. Maybe this is the week we do a butterfly alert. We've done calendars before, but never butterflies. So we'll talk about that. All right. Well, here it is. The market's regained a lot, but that's just the first 1 hour. Oftentimes we know there's a tale of two halves, and if the sellers come back in the second half of the day, we may see a little tug of war back and forth. It's nice to see the buyers come in quickly and respond. We'd love to see the market hold up. So there it is. All right. Well, it's good to see everybody. Again, fingers crossed for a short conflict, and we'll see you guys tomorrow morning. Have a great rest of your day. As always, happy trading.